In this presentation, I'm going to show you how to do Fib extensions. There's numerous ways of doing this. You could either use Elliott's waves to do it, which is quite common, or you could do it the conventional way. In this example, I'm going to show you the conventional way. I'll just show you on one share in particular, a big golf keystones. I know it's quite popular. Obviously, this is all hindsight based now because obviously, just showing you hindsight for the time being because it's easy to explain it via hindsight. So in this one, you take the bottom is this point here, and you move it to the high, which is this point here. Then you project it. Now the projection from this wave here will be from the lowest point from here, which is to be this point here. So you project it from here. There's your Fib's projection projected. As you can see, the 100% Fibonacci was there. As the price went up to it, boom, straight down, back up to it, straight down. It struggled that level for a long time until it broke out. So you know that's a good level, that is. You could probably, as you can see, that was quite an important level as well. All that area. So let me try and do another projection from getting from the low to the high, which is there. Then bring it to this low point, and you can see projected 100% here, struggled, couldn't go above it. Then you went up to the 1.8 Fibonacci where couldn't go any further and straight back down. I'll show you another example on other formats like currencies or Dow Jones. There's a Dow Jones, for example, same principle. Projected from, I'll show you these little waves. Take the low point here to the first point, which is here, from here to here, then projected from this low point here. There's your 100%, and you can see it rallied all up to there and it struggled, and down it went, and eventually broke through, but then come back down to the 61 point. Which don't really mean anything really, but these 50 levels so sometimes actually give it support. But that's just down. That's just using these simple waves. I could go bigger waves as well, but you may not see it all on this chart, unfortunately. Let me show you. We've got a low point here. And you've got a high point here, and then you projected at the lowest point from here. As you can see, you can't really see the higher levels because my chart doesn't allow it, or can be, well, adjust the format slightly. So if you were to take that as a high point, that's a low point. From this point here, if you project to the 61.8 of Fibonacci, which is supposed to be near the recent highs of the Dow Jones, which will be here, 100% will be up here somewhere 17,000. That's a Fibonacci projection. I'll show you another example. Try Forex. Try to go back far. Let me try to do one the reverse way. Okay, here we go. This is the opposite way. Take the high, take the low, project it from this point here. That's the tracement, and there was your 100% there. As you see, price went to it, struggled, back up again, all the back up, and create a sort of trading range. Show another example. Euro. So, getting projection of a high point to low point there, and projected from the retracement level here. There's your 100%. So struggled around there, then the 161 area. As you can see, that's roughly how you do Fibonacci levels really. There's other way, this can get confusing sometimes. You can also do it like that, from that point there to the high point here. So that's all gives you that area again. Same on this one here. Now you know you've got your high, got a low point here, so you could do it from here as well. High to the low high there, low point which is here, projected. So whenever price hovers towards any of these Fibonacci levels, it will struggle. Especially this area will struggle quite a lot. The 61.8 which just happens to be resistance there as well. Show you another example. High point to that point there, then retrace back to that point there. And you can see on the way back down from there, 61.8 struggled back up, then it back 100% struggled back up, then the 161.8 struggled, and so on, like all the Fibonacci levels just start to struggle. That's basically how you do Fibonacci extensions, really. You need a high point and you need a low point. In this case, if you were to do that, like that for example, you've got a nice high point there, you've got a nice low point here, and you've got your retracement all the way back up here. And you can see the 61.8 level held it, 38.2 held it. Then on the way back down, 100% held it. So these Fib extensions are very handy to know. Once you've plotted them, it's pretty good. Like whenever it goes there, it does actually, in case of this, create support levels, and vice versa. If you're going upwards, it create resistances. Hope that explains how to use Fib retracements, sort of Fib extensions. I was a bit confused of both. For more useful tips and info, go to www.chartsview.co.uk. Thank you.